Hello, everyone. I'm KJ from Avarice Capital, and today is 3rd November 2025. So, before we get into the markets, I'll take a moment to give an introduction of our company and myself. So, I'm a 10 years old veteran investor and trader into broad markets, equities, debt assets, real estate, precious metals, and of course, Bitcoin and cryptocurrencies. That's the topic of today's video. And we deal in long term holdings, and of course, we do derivatives and a bit of a short positions at the moment. And as we speak, Bitcoin has been falling substantially today, but we'll just widen the lens, have the big picture, and see how things look at the from a demagnifying glass, and try to understand how this market works, and how this volatile asset is has been one of the best performing asset in the past 10 years, and what do we expect from the next 10 years, and how we are navigating our portfolios during these times. So, for those who are not aware of the cyclicality of the Bitcoin's market in the past 10 years, in the past several cycles, so basically how this works is that any market, any asset class in the world are all cyclical, and anybody who says otherwise is basically unaware. So the markets are always cyclical, and it has always been and always will be. And of course, it's very dangerous to time the market, and most of the financial gurus will tell you that it's very difficult. But um, I'll tell you how we have been navigating through it, and how you can maybe do it too, with a lot of discipline and um, a lot of hard work, and clearing your thoughts and keeping the right mindset. You can too do it, and it has been very profitable for us. Of course, we've been here since the late 2020 2017, and it's been a long while. And we have when we entered the market, our the crypto was not a huge part of our portfolio, but as the time went, we have, of course, due to the significant rise, we have seen a substantial amount of our portfolio in crypto. And but lately we have been selling, and things seem far overstretched. So, before we get into our analysis and how what we think the future holds for us, we like to, for those of you who do not know about the cyclicality, so the Bitcoin space is very much aware today of the 4 year cycles which occur here, and most of the people know about it, talk about it. If you go to the Twitter, you'll see everybody bragging about it, and they're giving their opinions on it. We have been using these cycles to trade in and out since a long time, and it's the right time to address a few things which we think are going to happen. So if you see, the markets have always been cyclical, especially in crypto. Although this is not specific to Bitcoin, this happens in every asset class. If you see, can see clearly that we always go through a time of bulls and bears, very specific, high definition. You can see it's when you widen the lens, when you look at from a monthly standpoint, it always looks very clear. You have to remove the clutter, remove the noise of the daily chart, which honestly is just very chaotic, and won't give you too much information. But when you do see things on a broader perspective, on the macro perspective, you get to see how things work 1 year down, 3 years up. And that's not something which is very new to this asset. It has happened over and over and over in every asset class. Maybe in the future we'll cover a video separately on US equities or emerging markets or precious metals or something like that. So we'll start off with understanding why this happens, and why what we have today is not going to be any different. If you see, specifically from Bitcoin standpoint, we have always had around 12 months down, and 3 years up. That's how the cycle has always played out. They have played out very fantastically, uh, clockwork. Like, you can appreciate the beauty of it, and how it always works out in the right way. But somehow, people are always going to hold the narrative that this time is different. In fact, there's a very beautiful quote by Sir John Templeton. He says that the four most dangerous words in investing is that this time is different. So that's That's what, if you see the space right now, most of the people are saying this time is different, but that's not how it's going to pan out, or at least that's not how we are playing our portfolio. If you see, it's very clear that we have seen these cycles several times, and it has been very obvious when to get out and when to get in from the hindsight. But when you get it to the daily and when you actually get to do it, it's not that easy. And obviously that's what makes it so difficult and so rewarding at the same time. Investing is a very tough business. It has all to do with your mindset and the right uh, actions which you take, which are honestly just two to three right buttons which you click in a year and you earn a ton of money, but you have to get those right. So the intensity of those decisions is very high. You have to make them right. If you get them wrong, you're going to lose a lot of money. um, and to manage your emotions and to manage your mindset is the most important thing. We have a genius analyst guy. He's a marvelous person, and in my opinion, that person should be a billionaire, millionaire. But sadly, that's not how markets work. It's not just the knowledge which is going to make you rich. You also need to have the guts to pull the trigger, and that's what investing is all about. Because there's a quote which I read somewhere that says that when the time's right, you won't want to buy. And that's completely true, because when the time comes, it becomes very difficult, because most of the times you have to play against the crowd, and that's not something everybody is very fond of doing. So we've had these cycles since 2013, and it's played out wonderfully well. And if you can see that, of course, the cycles back in 2017 uh, and the previous cycles, they were very blow off tops and very obvious to recognize. But as you proceed in the cycle, and as an asset class matures, you always have a like a law of diminishing returns, that and it becomes pretty difficult as more and more institutional investors and professionals get into the market. They make things more difficult, and of course there's going to be more manipulations, and things are going to get tougher and tougher to analyze, to predict. And that's what we are observing. So we'll move to the weekly, just to have a look in a more uh, zoomed in format. And most of the people will tell you that this cycle has been very difficult to trade, to invest, to hold through. If you see, even in the prior cycles, we've always seen like huge drawdowns because of the volatility of BTC. How difficult it has been to hold through such tough times, but that is necessary. If you're not able to hold through the minus 40%, of course you're not going to get the plus 10,000%, right? So that's the basic idea. You have to hold through those times, and that's why you hear of the things called hodl, hold on for your dear life, and all those things which are very famous in crypto space. But all in all, it has been a wonderful 10 years. Mm, and the asset has been the best performing across the board. But for the reasons which we will discuss in detail further, we believe that we are heading towards a bear market, which is going to last for the next 12 to 18 months, which will get us to somewhere around the Q4 26, and possibly as far away as Q1 or Q2 of 27. But it's nothing out of ordinary. This is something which everybody who's been in the space for a long time should expect. Now, it's not about putting the sorry, I'll get this out. So it's not about putting the right numbers, because nobody knows for sure. Anybody who says they do is basically being immature. Nobody can put out the exact numbers where it's going to end. But for reasons which we believe that we have already topped, the BTC in this cycle has already topped. We're probably never going to see it going surpass the all-time high, which was around $126,000. We could see some sudden wick or a sudden price movement, or like a shakeout, just a manipulative move, but nothing substantial which is going to move further and take us to the next highs. And even if we see a 20%, 25% upward moves, which is going to take us to somewhere around $150,000, but that's nothing, because we have to keep leave the money on the table because we have come from a long way and we've made a great return, and we have to look ahead. So basically the idea is we don't want to buy here, we want to buy at the lows and we want to sell at the highs. That's the basic idea. It sounds very easy, but it's very complicated when you do it. We want to sell here at these highs and we want to buy at these lows. So this is the idea. What we are planning to do now is we are going to wait, be patient, very patiently. We are going to deploy our capital in these areas. Nobody knows for sure what those exact numbers and the percentages are going to be, how down we are going to fall, but you can always make a ballpark, and that's what investing is all about. Making It's all about the probabilities and possibilities and not about certainties. So as you can see, we have it's nothing out of ordinary, seeing a 84% decline here in 2017, then seeing a 76% drawdown, and we are expecting a similar, at least a 70% decline back to these regions in the next 12 to 18 months. And for very obvious reasons, actually, most of the people would agree that during the 2017 mania, it was quite very obvious that we are heading into a bull market. We're heading into a speculative phase, and we are going to crash. Many people got out, but this time was very difficult. In the last cycle, in 2021 cycle, it was quite difficult, and most of the people were still holding to their bags because they were not able to get out of the market, since they were anticipating 2017 like bubble, I mean blow off, but it never occurred. We barely just surpassed the all-time high, and very similar situation happened here in this cycle. And if it's a very interesting coincidence, if you see that here it was a very single topish um, top, single top, and this formed like a double top, and here you can see a triple top. Now of course this doesn't look like a triple top because you are seeing from the perspective of the price, but if you see from the perspective of the momentum, it surely was. This time, this part of the cycle was very bullish, everybody was buying it, the volume was very high and the momentum was very high, and in trading, it's all about momentum. If you bring out the RSI, it's a nice indicator which gives uh, a rough estimate on how the momentum is going on. If you see during the 17 Q4, we see great bull runs. When you come to the next cycle top, even though price was going up and we surpassed the all-time high, but the RSI was falling. And very similar here, if you see in the recent cycle, during the March of 24, we did hit the top of the RSI, and it has been falling ever since, even though the prices are rising. And that's very classical chart pattern. It's very uh, easy to recognize. We have been selling all this year, all the year 2025. We started selling somewhere around December, and that time was pretty difficult for selling, and we were also having a lot of second thoughts, and we had to be very careful. But since then we've had a drawdown to the previous all-time high, and then we rose back up. But this time is not that difficult. Most of the indicators which we are seeing are all just pointing out to the same thing, that we are indeed heading towards the next bear market, and we have to go through the pain of things going down for the next 12 to 18 months. The sentiment in the market is extremely high. Of course, the administration is very supportive of crypto and everything seems nice, but generally that is the difficult part, because you have to sell during the good times. You have to get out of the train when the train is moving at the high speed. That is the only way to get out. If you wait for the train to slow down, you probably won't get the right price. So you have to jump out knowing that, yeah, you are leaving some of the money out at the table. So even when we were selling back in December, we were leaving a lot of money at the table. In hindsight, yes, sure, we left 18% on the table, but that's fine because that's part of the game. We know how the game works. We have been up 580%. We have to leave the 18%. If we focus on the a little cherry on the top, we are going to miss out on everything which we have worked for in the past 3 years. Nevertheless, it seems like the end of a beautiful era. We have had four beautiful cycles, and this seems like the end of it. I have been extremely bullish on Bitcoin specifically since a long, long time. We've been holding and buying at any occasion we are getting. but now it's starting to become too big of a thing, and everybody's into it, and the cycles are getting closer to the end, and even the it's aligning perfectly with the long term cycle of the broader markets. The larger equities, US, of course, is also getting into a very high valuations. Most of the companies are becoming very speculative. The sentiment and the psychology of the people involved is extremely bullish. Everything seems perfect, but that's exactly when we want to get out and protect our capital. And it's not the end of our investing uh, career, is just an end of a market or end of a bull market. We do deal with so many other assets, and we always keep getting new opportunities, but we have to part our ways, and this is what it looks like. We have to It's been difficult selling here, but easy to analyze that we are in a topish area, and this is not going to keep going on for a very long time. And sooner or later we will come back to 74, we will come back to 50, and we will of course make a low. Where exactly we're going to close the cycle, create the low, is of course nobody knows, and nobody can claim to know, but we can create a area, like a basic idea. So this is where it should be, which we expect somewhere around to be 25 to 40,000 mark. We have never been so bearish on BTC. We love it as an asset class, and that is the beauty of this profession, that you do and can have opposing thoughts inside the same brain, that you are also bullish and also bearish on the same asset. Of course, we are bearish in the short term, and by our definition, short term means 1 year, 12 to 18 months, and the long term means like a decade. So of course things are going to go down, but it's never happens in the straight line. It always occurs in smaller cycles, which are integrated inside the larger cycles. So for example, this is a 3 year secular bull market, but it's not never went to from bottom to the top in a straight single line. It always goes in various smaller weekly cycles, and such ideas are very common in the BTC space these days. But most of the people are calling for the end of this 4 year concept, that this is not going to work out because of so and so and so. But whatever reasons you believe are just reasons, and they don't genuinely have to work. And even if they do have to work, you just have to look at the probabilities and what are we getting. So if you're for someone who entered the market recently, of course it doesn't make sense for them to sell. But those who have been here since a long time, and they know how this market works and how volatile this asset is and how many opportunities this can provide, are obviously going to play safe. If you look at MSRT, MicroStrategy, or a Micah Saylor's company, that is also doing so bad, and that also gives you another idea of how things are going to pan out. So I think that's it for today. We'll of course try to keep updating you guys with our ideas and how things progress and pan out, trying to convey our plan and our strategies and how we are navigating through this bear market, or how we are seeing. And if things go well, we are looking to give our ideas on other broad market indexes. Like, we can have a separate video on Nasdaq, Dow Jones Industrial Average, and S&P 500, and other asset classes, like emerging markets and precious metals and various other assets which we are interested in. It's not just BTC, and doesn't have to be. um, and good luck to everyone, and we'll hopefully see you soon.